Good morning, everyone. Welcome to today's Quick Start class, our Quick Start training. Good morning, good afternoon, depending on which part of the country you're in or which part of the world. Before we do get started, I'd like to do a quick mic check. Please type a 1 in the questions box if you can hear the sound of my voice. I want to make sure I'm coming through loud and clear. All right, excellent. Charles, Jennifer, Rick, thank you guys. All right. Joe, awesome, thank you guys. Matthew with the 2. All right, I like it. All right, everyone, welcome to day 2. We're going to kind of pick up from where we left off yesterday, look at a few more trade setups, and walk through the money management strategy a bit if you guys need a little refresher on that or want to cover that a little more in depth. For those of you who don't know, my name is Greg here at Academy Day Trading. I do handle training and customer support, answering any trading or questions about the indicators. So our goal here is to get you guys up to speed and using Pro9Trader effectively to spot the highest probability trades and be profitable in trading, which all of us want to do. So we did have a few good setups, and then later through the day, I can talk about we'll talk about the importance of ascertaining clues from the market that can let us know when it may not be an optimal time to trade. And that even if we do see a trade setup, it may not be the best idea to enter it at that point, depending on what our indicators tell us, as we can recognize when there are signs of chop and when it's not a great time to enter the market. So let's hop right in there. First, on our friend the TF. Now, right out of the gate, this moved very quickly, as we can see. Opening bells here, next bar plots 1 second, next bar plots immediately after. So a lot of movement right away. So these situations are a little tricky to get in. It is possible, but we do have to be prepared when we see a lot of movement. So, and in this case, it just may not have been possible to catch this first momentum entry. As you can see from the close of bar 7 to the close of this bar, we had 12 seconds, which may have been possible. As we know, even back here, that we're set up for a long trade. All of our EMAs are in the correct order. Our blue line is on the correct side of the histogram. So all we need to see is a momentum arrow. So if we have our dome up, and as these plot, we see this momentum arrow, we can put our order in the dome if we're quick, and then immediately after, we'll have hit our profit target. So it's a very quick one, still possible, but again, these really fast moves right out of the gate are a bit hard to catch. We did have another TF momentum a bit later. This one had a little more time to hop in, a couple minutes in between, minute and a half, almost 2 minutes. So in this case, we're much more likely to enter this one. And again, we're still all set up for a long trade. So I know the only thing I need to see is my momentum arrow. Now, some of you may be noticing this. The blue line does dip right in below the purple line. And in these cases, it's okay. I still like those trades. I'd still take it because it's really only dipping below because the direction histogram is so bloated that the blue line really just doesn't have anywhere else to go. And it's not moving outside of its normal range or anything that would make me concerned that it's not going to get to the correct side when the next bar closes. So these are very rare, only happens when there's a huge or a long run, and the direction histogram gets so bloated. So in this case, our entry price would be 1374.2. And again, we'd enter with 3 contracts, a 15-tick initial stop, and 6-tick profit target, excuse me. After the first bar plots, we are more than halfway to our profit target. We're not going to adjust anything at this point. We're going to leave our stop at 15 ticks, as it does give us a good amount of wiggle room in case another tail pops up on this run. That may just be a head fake. Then after this bar plots, we're only looking for 2 more ticks. So I don't think it makes a ton of sense to tighten our stop when that could result in us getting stopped out, rather than just leaving our stop where it's supposed to be until we hit our profit target. And then before the close of this bar, we'll have hit our profit target. I was actually watching this trade this morning in the SMR, Smart Money Room, and this really took off. So if you're using an ATM, which if you're able to, they are extremely helpful, as all you have to do is put in your order, and once it's filled, the ATM will manage the trade for you. And after this point, we'd sell off 2 of our contracts at 6 ticks and adjust the stop on our runner to break even. And as this continues to move very quickly, again, we can see that there isn't a lot of time in between these bars. And we would keep trailing after the 4th bar from our entry bar closes. We'll start trailing at the low of this bar, as that's the first point that we can move our stop to be above our break-even stop. So it'll be a tick above. And then for the next bar, we'll adjust to the low of this bar. And once the 6th bar from our entry, we'll widen it to the DPI. And this will let us ride over any tails that happen along the run. And then as each new bar plots, we just adjust it to the new red DPI that's displayed until we get stopped out. And again, this is a great example of why I like to widen to the DPI, because it lets us ride over this situation here. We don't have to worry about getting stopped out by this wick and hopping back in on a momentum trade, just in case the next bar is a turn bar, which in this case it was. So if we were trailing at the low of the previous bar all the way up, we would have gotten stopped out here, triggered another momentum entry, and if we got it on this one, we take a full stop on the next bar. So ideally, of course, we want to get in as early as possible, mitigate our risk, and maximize our profit. And widening the stop to the DPI, I feel, is a very effective way to do that for this exact situation. I just want to ride the rest of this run until I get stopped out by a turn bar, because that lets me know there's been a significant enough price movement that the run's over. And now it's possible we could start trending back down, in which case it does. This was not a qualified divergence reversal, as we did not have the blue line moving against the price bars, or the opposite direction of the price bars. So Joe mentions, can I address the purpose of the yellow turn bar? What is their significance? The yellow turn bar very simply tells you when the super trend rule is not qualified. So let's see if I can find one on one of our charts here. So we do have a few in the CL. So if we look here, we see we do have a yellow turn bar, and our super trend is not outside of its neutral zone in the correct direction. So that is not qualified. Also, our turn bar does not touch the 50. If we look at some of our rules for a continuation or a single T, in parentheses here under our super trend rule, It says not required if the turn bar or first color bar touches the 50, because this lets us know that we can ignore the super trend not being qualified for that trade. So if the super trend is not outside of its neutral zone in the correct direction of the trade, and the turn bar does not touch the 50 at some point during its creation, the bar will be yellow, letting you know that this rule was not qualified. So whenever you see a yellow turn bar, it is likely that if that is a continuation or single T, that it will not be qualified because the super trend is not qualified, and we can also not ignore the super trend. Just 1 second. All right, and let's take a look at the TF because some interesting stuff happened in the TF later on in the day. Now we did have 10 o'clock news, so if you didn't join us yesterday, I would like to stress this, as it's very, very important to how we trade, is the news. We're looking for any news event that has a green, red, or black dot next to it. So these were before market open. Don't have to worry about those because we're not going to start trading the CL until 9 and the other markets until 9:30. We do have a news event at 10, 2 actually, and one later at 1 p.m. So we're not going to trade from 9:55 to 10:05. So we did have a little price reversal. Our blue line came down to this extreme. If we're looking to enter any long trades, naturally we need to see the price move back up, and our EMA stay in the correct order, and our blue line get to the correct side of the histogram. So right now, nothing much is going on. So we have this turn bar. Could be a possible single T on the first color bar, but we will have to wait and see if it closes. It does, and our blue line doesn't quite get there. So, and again, this was a good example where, as I just mentioned, we had to wait for the first color bar to close to confirm that our blue line gets to the correct side of the histogram. Because we don't want to jump into a trade that's not fully qualified willy-nilly or ahead of, before we're fully confident that it's going to go in the direction we want. So, and very important, I follow the rule. If you're not sure, wait. Much better to maybe have to attempt a retracement than to put in an entry where it was pretty questionable if that rule would qualify, and then you end up getting in an unqualified trade situation, and it could very well go against you. So you may get lucky, but you don't want to get in the habit of relying on that. So Matthew asked a great question. Why isn't the background green from bar 37 to 39 and 40? So this little section here, may have noticed that the colored background is no longer green, which it looks like it should be. But remember, with the most recent update, the colored background now checks for our 10, 20, and 50 EMA to be in the correct order, and also our blue line to be on the correct side of the histogram. So right here, at the close of bar 37, because the direction histogram is so bloated, the blue line dipped back below this purple line. Now it's very close to tell visually, so just looking at this section, it looks like it's right on top of there. And if we check the data box, it's barely below the purple line. But the green background is functioning correctly. It's just very difficult to tell why because it's so close, but we can look at our blue line. It will turn white when it crosses from one side of the histogram to the other, or when it crosses the purple line. So here we see that it's just right above the purple line. Then it does move from the top being above to being below. And then it rides right on the edge. So sometimes it's difficult to tell visually in cases like this, but we can always recognize when the blue line is crossed by the areas that it turns white. So. Oh, Jennifer asks, is there a function that can blow up a section of the screen to see better details? You can. If you move your mouse over to the y-axis, you can kind of stretch these out more. And I believe you can, how do we do that? And then if you just click your mouse on the bottom, you can stretch everything out if you really want to see those details in there. And these little F's on the side will kind of reset and center your indicators. So it's a way you can zoom. You just click and drag on the axis the direction you want to spread it out. And same goes for these vertically as well. So back to our friend the TF. All right, excellent. You're very welcome, Jennifer. All right, so here we are, nothing setting up yet. Blue line didn't quite make it. So now at this point, our blue line finally did cross, but I would like to clarify that this would be an unqualified entry. And why is that? Because our entry points are the turn bar or up to the first color bar. So ideally we want to get in when possible on the turn bar using the DPI that creates the turn bar. But if we can't get that price, it is acceptable to enter on the first color bar. Any point later than that, if we're talking about a trade that we would normally enter on the turn bar, bar 3 or later, even if it lines up then, is not qualified. That's a late entry, and just statistically over time, those don't usually have enough steam to hit our profit target. So unless we're looking for a momentum or something, we're just going to wait for the next fully qualified entry. So we got up to this point, and the high of this bar is 1377, which seems pretty inconsequential. Oh, that's a great point, Jennifer. She asks, referring back here, so no attempt at a retracement back to the first color bar price. No, and the reason for that is because this trade didn't qualify until the close of this bar. Now, if the trade qualified on the close of the first color bar and we had to wait to see that confirmation, then we can attempt a retracement to the first color bar or even turn bar entry price if we can get that. But if the trade qualifies later than that, as it did in this case, as we see all of our rules don't line up until this third bar, that's too late to qualify the trade. So very important distinction. And that we don't want to get into these trades too late. We want to make sure they're qualified by the first, or by the turn bar, or by the close of the first colored bar. So any later than that, it's not actually a qualified trade. So I do want to point out this right here ahead of time, as it will become important later. The high of this bar at 1377. So now we come up a little bit. There's no qualified trade in here. We're going to start heading down. Now, this was a qualified trade, although it happened right. No, we're not at news yet. So, and we did have enough room to enter this one. So, if we did enter this, it may have went against us, but this can be our first clue that we might be heading into signs of chop. We're not always going to be able to tell ahead of time, or it's not always going to be clear. So we may end up taking a losing trade before we can fully determine that maybe I should sit out of this market. But now I have a couple turn bars in a row. I've got my EMAs starting to come together. They're real close. Most importantly, I have my blue line kind of bouncing up here. It hasn't reached its extreme. So that does let me know after this point, I do want to be a little cautious. So now I'm starting to see this pattern of these short little cycles, right? So after this one, I'm actually going to decide to exercise a bit of caution because I feel like we may be heading into not necessarily a directly choppy market, but we can get in these situations where the market gets locked in a price channel, where you'll see it just bouncing between a range of two prices, and which is why I pointed out this 1377, as we're going to see that again in the very near future. So here, a possible single T, we do want to see our EMAs get in the correct order, and our blue line cross to the correct side, which it may not. But still, I would exercise a bit of caution. Because of this, I feel like the price is getting locked into a channel. There's some resistance up here from the high of the day, and it looks like we're bouncing off the 50. So my blue line did get to the correct side of the histogram. And this single T would have hit profit target. But again, let's watch this 77 price. So again, the high of this bar is almost the exact same point of resistance we saw. So now it's becoming much clearer that we're getting locked in a price channel. So when this happens, especially my blue line isn't really heading, it's almost reaching its extreme, but it's still kind of not presenting itself strongly enough that we're getting out of this cycle. And Jennifer mentions hitting resistance at the top line. Yeah, and the high of the day can be a point of resistance. So we do want to be careful, which is why when we take trades entering into the high of the day, we like our direction histogram to be outside of the neutral zone, as that gives us extra confidence that we're going to push through there. And this is a very particular case where it's not evidently choppy, but we are going to catch these shorter cycles. So during these times, if you notice this, it might be a good idea to just kind of watch it and see if it breaks out of this channel first before entering these trades. And we'll see that as this market continues to go. We do dip a little below the 50, a dot trend here, but this is during news now. So after this point, there were no short setups because our EMAs aren't in the correct order. We do have this possible dot trend. I'll point this out and we'll go over the rules so we know what to look for. but this would have happened during news, so he wouldn't have entered this trade. We did see a few examples of these yesterday. So again, it appears in a section of the chart where the background color does not indicate that we're set up for a long trade. So it can be easy to not pay attention during those times. But we want to stay in the habit of at least continually scanning however many markets we're watching. So we have an idea of what's going on and if we should be looking to anticipate a trade setup and just kind of be ready so we don't get caught off guard. But again, during this time, I mean, we're in news right now, but I do want everyone to pay attention to this pattern of coming up, bouncing off, coming back down, bouncing off. And you'll see a clear channel develop. So we do have our green dot to be the first clue that we have a dot trend trade. And we have our 20 above the 50, above the 200. And next we're looking for our blue line to be above the histogram. So we may need to wait for this first color bar to plot to confirm. Or we will need to. And at the close of this bar, it does confirm. So we can retrace to our original entry price or this first color bar entry price. This one did seem to move fairly quick, but still able to be caught. But we wouldn't because it was news. I just wanted to point out the rules. And Joe asked, generally speaking, would you attempt retracement entry on a qualifying momentum bar? If so, only on the next bar. With the momentum trade, you can attempt a retracement, and you would just want to use the original entry price you would have entered. So in this case, if I had to wait for this bar to close to confirm, I would still want to use the DPI that created this bar that the momentum arrow was under. That's the only entry price for a momentum trade. So you can attempt a retracement at that price, but not the DPI in the next bar or after that. Unless that has an arrow as well, then that would just be a qualified momentum. Joe, would it be possible to develop another background color or shade for 20, 50, 200 alignment? I'm not sure about that one, and I think that may be adding too many things to consider. Because the dot trend is fairly infrequent compared to the other trades, we'd end up just seeing sections with a different shade of, whatever color it is, but there would be nothing there. So I think, and more indicators uses more resources from your computer. So that may be adding a lot for not enough benefit to justify having a whole other color background. For a very specific configuration, and these dot trends only pop up on average from 3 to 5 times a month in any given market. So and as the price continues to move, I want you guys to notice where we're heading. So again, we've seen this area, this price kind of be our point of resistance at the moment. And it is within a bit of a range, but still we're having trouble getting past this point. So now I'm definitely going to be a bit more cautious taking trades up to this point because it just seems we're having a lot of trouble breaking through. And then we do move a little lower than our previous point where we bounced off. And this is another dot trend entry. So while they are rare, sometimes you will see them back to back. So we do have our 20 above our 50, above our 200 again. And then again, we're going to need to wait for the first color bar to plot to confirm our blue line being on the correct side of the histogram, which it does. So again, we could attempt to retrace back to this price or the turn bar entry price. This one did move very quickly, so it would be difficult to enter. So now about this momentum entry, and remember how I said we're kind of being a little more cautious, right? Because I've seen this too many times today. We're kind of in this range. We're having a lot of trouble getting past it. And we're heading right up there. And Jennifer does mention looking for a breakout. And we may want to do that eventually, but we can't even get up to the high of the day yet. We're having trouble breaking past this point. So even though this is a fully qualified momentum, just if we look at these short cycles, right, we haven't had any, besides this right out of the gate run, that was all very quick. The market did slow down significantly, and then we're seeing this pattern over and over. And so this can clue us in that the market could be at this point where it's just going through these very short cycles. So, and since this, I haven't seen a run get past the bar 7. So I'm a little worried, and this is right up to that range where we've seen resistance from earlier this morning several times. We haven't been able to, it's attempted, but hasn't been able to get there. So I'm actually going to wait because I feel this isn't necessarily a choppy market, but it's not displaying strong trends that lead me to believe that this momentum trade is going to take off. And so looks like the correct assessment was made. So something to watch out for that I think can trip us up, especially when first starting out, whereas we might look for clear signs of chop, but there's also these short cycles that happen, and you'll notice them the more you look at charts, where the price just gets locked in these channels. Usually it's most apparent when the price is reversing, and then we'll get stuck between the 50 and the 200 in the same pattern. But sometimes it could be, the 50 and the high of the day, or some random price that just seems to be a resistance level. And then now it looks like we're getting clear signs of chop. We've got a couple turn bars, lots of indecision here. Our EMAs are very closely roped together. Our blue line isn't really heading back and forth to extremes. It looks like it's going to start bouncing around here. And we really want to see the blue line moving up and down between its extremes pretty consistently throughout the day. So at this point, it's definitely confirmed that I'm going to wait and not really be eager to enter any trades in this market, as I have pretty clear signs of chop at this point, and I know we've already been stuck in these very short cycles that haven't provided a lot of movement. So even if I do see a qualified signal, I may want to wait to see it succeed without me and give me definitive evidence that we've returned back to clear trends, or see my blue line move back to its extremes. In this case, we head down. We see our blue line didn't get to its extreme again. So even though this is a qualified single T here, remember I said we're going to be cautious because of the information our indicators are telling us. Now, over time, taking all available trades will still result in net gains, but that doesn't mean we shouldn't consider the evidence that the indicators is telling us to help mitigate some loss, as it's not always necessary to do so, especially when our indicators are telling us, hey, slow down. You know, just wait, see what happens. So this one would have hit profit target. And we're thinking, all right, we have a momentum entry here, but again, we're coming up to this range again that we haven't been able to get past. So even though this one would have hit profit target, the runner would have been stopped out, because remember, we enter with 3 contracts, have a 22 tick stop, and then once we hit our profit target, we adjust the stop on our runner to break even. And the runner would have been stopped out by this tail here on bar 5. Now, we may be eager to hop in on this momentum entry to try to get back in, but I'm still not convinced that we're out of this long cycle, that isn't as clear as a straight up choppy market. And again, this one would not have hit its profit target. So our entry would have been 76.2. And the high of this bar got up to 76.6. And again, that's a number we've seen several times right here. Or right around that number. So it seems between this 1376.6 and 1377, we're having a lot of trouble breaking out of that range. So, and again, we may see the same thing. This one doesn't look like a qualified dot trend. And then here we are at the current time, but we can clearly see that we have a price channel here that we haven't been able to break out of since this point, since the market settled back down after this long run, haven't been able to get out of this area. So, I mean, we've been able to dip out a little bit on the short side, but still not enough to give us strong signals that we should enter into a trade on this market. So, something to keep in mind, even if there aren't always clear signs of a choppy market, it may be, and I imagine this is almost like a longer term chop that's just not as immediately evident. So, something to keep in mind during these times. All right, and let's take a look at our friend the CL. Now the CL was very choppy in the morning, so if I see this first thing in the morning, especially this right here, no clear trends, and really that's what our indicators are designed to do, is to make identifying the underlying trend of the market extremely simple. Because we know when everything's red and lined up red, it's telling us there's probably some good opportunities to go short, and vice versa if everything's green. All this, we see that our EMAs, they are in order, but it doesn't look very pretty. We just had our blue line bounce off the 0, didn't reach its extreme, And then now after this turn bar, I'm seeing a few turn bars too close. I've got the 10, 20, and the 200 all wrapped up together. And my blue line hasn't been going to extremes. Now, direction histogram is kind of weak at this point, as well as the super trend. It's okay, but not strong enough to convince me against these other three signs of chop. And now after this fourth turn bar, most definitely we're in a choppy market. And I'm not going to be entering into the first qualified trade I see on the CL. I'll guarantee you that, especially in this situation. It doesn't look good. We can all see that. If we can picture ourselves thinking about entering in a trade at this time, even if there were a qualified setup, it wouldn't feel very good. You wouldn't be confident about it because our indicators are clearly telling us that it's not a good time. So, and sometimes the markets are slower on Friday. It's not always the case. It seems more common than there being a ton of movement, although there were quite a few long runs right out of the gate. But after that, after the first 15 minutes, it did slow down significantly. So, but these are good times to focus on why it's not a good time to trade. As we do have clear signs of chop. Now we're starting to see a better trend develop, but we didn't make it far enough for our EMAs to get in the correct order for a long trade. And now we've hit another turn bar, so we're turning around. So we want to see heading into the 200, nothing much developing. Now finally, 3 of our EMAs are in the correct order, and our blue line's on the correct side for a short trade. We did just hit an extreme, so we do have this momentum entry. And this one just depends how comfortable you are. I did see my blue line just come from one extreme and make it to the other. So that's a pretty strong sign that I'm out of chop. So this one could definitely be entered. It may feel a little more risky, but it is fully qualified. We do have some kind of strong signs that we're not in a choppy market any longer. And we have plenty of space before we hit the low of the day. So I'm pretty confident we can at least hit 6 ticks from our entry price. So we'd be looking at 52.41 as our profit target. And again, with our momentums, 3 contracts. Six-tick profit target, 15-tick stop. After the first color bar plots, we're more than halfway to our profit target. And this one does hit profit target. We would sell our 2 contracts for 6 ticks each and adjust the stop on our runner to break even. And then we get this wick here, which stop out our runner. And this may be one we had to attempt a retracement on, because we do notice this is very close to the low. Our entry price for that bar is 52.35, and the low is at 52.30. Now when this bar is plotting, before it plots all the way to a red color bar, we wouldn't know that our direction histogram is going to be outside of its neutral zone. So if we look at this point, we're at minus 46. When we're heading into the low of the day, we need to be at least minus 51. So at this point, it's not. When this bar closes, and we see that our direction histogram does get outside of its neutral zone, then we can attempt a retracement if we feel confident that we're going to break through the low of the day. And we're only looking for 6 ticks, so we need to get to 52.29. And now we're more than halfway. And we do manage to hit our profit target, and we can adjust our stop to break even. And then we're going to catch a reversal. So our runner would be stopped out. But we managed to hit 2 profit targets in a row, which is pretty good. And now we're reversing our previous trend. So we're not going to we have to wait for our EMAs. It looks like we came up and bounced off the 200 and the 50. So not always a ton of trading opportunities. So, and during these days, I think it's okay to kind of sit back, be a little more cautious, and really wait for the best setups. Because ultimately, it is up to us to enter the trades. So sometimes your judgment and assessment of the market is correct. And if we see, even if we have signs that we're heading up to the high of the day, but you've noticed that the market hasn't broke through the high of the day, you may make a note that that particular breakout may be a little more risky. And that depends on your risk tolerance and your goals as a trader and your account size and all that stuff. Cliff mentions 3-day weekend. Yes, the markets are closed on Monday. It is Martin Luther King Day. And Cliff also asks about the yellow turn bar. The yellow turn bar just lets us know that the super trend rule is not qualified for that particular trade. And keep in mind, though, that it only applies to trades where the super trend is required. Now, we do see this yellow turn bar, but this is a divergence reversal. So we're looking for our super trends to be outside of its extreme zone in the opposite direction that we would normally want to see our super trend. If we were looking for a short continuation or a short single T, we would want to see our super trend at -20. So if we see a downward turn bar and our super trend is not outside of its neutral zone, we're going to see a yellow turn bar. Also, if the turn bar does not touch the 50 EMA, because that rule lets us know that we can disregard the super trend. So if those two conditions are not met, if the super trend is not outside of its neutral zone in the correct direction, or if the turn bar does not touch the 50 EMA, the turn bar will be yellow. So it's basically telling you that the super trend rule is not qualified if you're looking for a trade setup that requires it, like the continuation or single T. The divergence reversal is a bit different because we want it outside of its extreme zone in the opposite direction. And we'll cover the divergence again, because it is one of our trickier trades. It is a counter trend, so it doesn't always feel immediately right, because all of the other trades are trend trades. And now we're saying, why are we taking a trend or a trade against the trend? Because sometimes when there's price reversals, the price can just drop. And if you can get in at the right price, it can be extremely beneficial for our P&L. So our first clue of a divergence reversal is going to be our red dot. And you'll see this trail somewhere in the middle of the run. It'll pop up above these color bars, and it won't stick until there's a turn bar if all of its qualifications are met. If they are not, it will move on to the next turn bar. So this doesn't affect live trading because we will still see the dot, and it will let us know if there is a possible qualified trade live at that time. So again, we have a red dot. The next thing I like to check to make sure that I should continue looking at this divergence reversal trade is my super trend, because my super trend needs to be at +60 in this case, since we're looking for a divergence reversal short. So if I see my red dot at the end of a long run, but I notice my super trend isn't anywhere near my extreme zone or outside of its extreme zone, I know I probably don't need to really look at this closely. I can continue to watch and see if the run goes on longer and my super trend gets bloated enough. But if it's not, I know I can probably put this one on the back burner, maybe check back on it in a few bars and see how it's developed. In this case, our super trend is outside of its neutral zone. And you can imagine this like a rubber band or slingshot made of money being stretched until it snaps. Then next, we're going to wrap up a couple rules into one. I think it's easier to understand them this way. We're looking for the price bars and the blue line to be plotting in the opposite direction for at least 5 bars, no more than 10 bars. These numbers on the blue line will start counting sequentially when it is moving in the opposite direction of the current trend. So we can see here it starts counting sequentially all the way up to 10. It can go farther, but that's extremely rare. So in this case, the way I like to wrap up rules 1, 5, and 4, because again, we're also looking for our blue line to be on the correct side of the histogram, and it will often cross over when that turn bar plots. The way to sum up all of those rules is when this blue line gets to the correct side of the histogram, this number needs to be between 5 and 10. So that's the simplest way to look at those rules. It could very well get all the way to 7, 8, 9, and then dip up again, and it will reset. If it resets back to 1 and then crosses through, no longer qualified. Now that we have all of the first 5 of our rules for the divergence reversal qualified, we look at rule 6. We do have our turn bar, but we're going to wait for 2 color bars to plot to make sure it doesn't turn into a continuation. Sometimes, even if we have a perfect setup for a divergence reversal, the trend is so strong that it will just turn into a continuation and then take off, which is okay because we could enter into that continuation if it's likely to be qualified. But the reason we wait for the divergence reversal is I don't want to put my order in now at this DPI and get filled and then have my first color bar plot. I'd be halfway to my profit target. But I don't want to see that next bar turn into a turn bar and then have a continuation set up, because that would stop me out. I could get in on that continuation and hope to make up for that loss, but I'd rather avoid that situation altogether and confirm that this is indeed going to reverse at least far enough to hit my profit target. Hopefully to continue running, but we want to at least hit our profit target. So we see that our second color bar does plot. And now we can attempt for our retracement back to the turn bar entry price, which in this case would be 19,854. And we can check if this, so this does retrace far enough to get our original entry. And the good thing about going for retracement entry at this point is that before this bar even closes, we'll hit our profit target. So if you're not using an ATM, you may have to just watch the price a little closer so you know when to adjust your stop. Because like our other trades, this is going to be 3 contracts. This time with an 8-tick profit target and 22-tick stop. And after the trade moves 4 ticks in our favor, we can adjust our stop from 22 to 18 on all 3 of our contracts. This does tighten it a bit and helps mitigate some of our risks should the trade go against us. And then we only need 4 more ticks before we hit our profit target. Then before the close of this bar, we'll have hit our profit target, sold 2 of our contracts at the 8-tick profit target, and adjusted the stop on our runner to break even, which is our original entry price. And then in this particular case, this wick here would have stopped us out. It did just get up and touch our break-even stop. So that is going to happen sometimes. Oh, Jennifer's asking, so the turn bar is the bar before the yellow bar. No, I should have explained that. I don't want you to get confused. These are the turn bars, but when you look back historically and you want to know what the DPI price that created this bar is, you have to check the bar before. And I'll explain why. This will help you understand, as it seems a little counterintuitive at first. But this is the current DPI displayed. If I click on the data box before, because this bar isn't finished plotting yet, so if I click on this box, I check my data box on the bar before, it will display the same DPI numbers. You can see that in my data box, DPI green is 19,820, DPI red 19,794. If I try to check the DPI on this bar, it's not applicable because it's not created yet. So that's why when you look back historically and you want to know what the DPI price that may have been your entry price for a turn bar, you just want to check the bar before. So sorry for any confusion there. Yes, it is very important. I should have clarified that earlier, so I don't want any confusion on our entry points. But it is very important to stress that our entry price will always be a DPI number, except for the breakout. A breakout will always be 1 tick above or 1 tick below the current high or low of the day, depending on the direction. So, very important to recognize that we do have very clear entry prices. So any entry price other than that is not a qualified entry price. So which is why we say enter on the turn bar or enter up to the first color bar. And we mean the DPI that creates the turn bar or the DPI that creates the first color bar. Any entry price after that is actually not qualified because that is a part of the rules. It may seem just like a suggested entry price, but it is in the rules for a reason. And I think it makes it much easier because knowing that if I had a trade set up here, I can just look at my DPI and say, that's my entry price. And it also has the added benefit where if I was looking to go long here, my entry price was 19,820, I would put my stop limit order in the DOM. And then if the price reverses, it's just never filled, and I can cancel that order and wait for the next qualified trade. So very important to get familiar and comfortable with the DPI. Another way to know what your DPI price is just to add a tick to the high of the bar or subtract a tick from the low. So if we look at this bar, this turn bar, the high is, well, it won't work for the high because it's not going that direction. But since this is closed as a short turn bar, the DPI would be 19,854. And if I check the bar before, DPI is 19,854. So that's a different way to check for the DPI price if you're looking back historically. If you're watching the market live, you'll always see the DPI displayed over here. And for anyone not familiar, we did just see the yellow DPI. If you haven't spent a lot of time with the most recent version of Pro9, the yellow DPI basically warns you that you're not clear of the 200. So it's also a warning saying, hey, slow down, we don't have enough space before we run into the 200. And that can always act as a point of support or resistance where we could bounce off. So we do want to be careful of that, and it's much better to err on the side of caution than just to enter a riskier trade. I mean, if we know that we have a chance of bouncing off a point, why would we enter in a trade there with more risk? We can take a look at the NQ. We did have some entry opportunities right after the opening bell. There was a momentum opportunity here. And again, this one would have hit profit target somewhere before the close of bar 5, our 6-tick profit target. And our runner, we would have been trailing at the low of this bar because we didn't get to the point where we can widen to the DPI. So we entered on this bar, hit our profit target somewhere in here, adjusted the stop to break even. And then again, after the 4th bar from our entry bar, we can start trailing at the low of that bar. And it would have got stopped out by this tail here on bar 8, but that triggers another momentum entry. And this one, same deal, same money management strategy, 3 contracts, 15-tick stop, 6-tick profit target. Halfway to our profit target, this tail didn't come down near close enough to stop us out. Would have hit our profit target, adjusted to break even, and then likely got stopped out by this tail here, which does trigger another momentum entry. So here we have 3 opportunities in a row. This did happen very quickly after the opening bell. But I think after this point it slowed down a bit, so you'd have time to enter into this one. And again, we hit our profit target somewhere before the 2nd color bar plots. Trail at the low of bar 15, adjusted to the low of bar 16 after that plots, and then widen to the DPI at the close of bar 17. And this is one of those cases where it ends up working out that doing that gives back a few ticks than we just had. So it's only a couple more than where we were at trailing at the low of bar 16. And that's going to happen sometimes. But I'm not sure how I feel about switching back and forth between those types of trailing stops. I like to just keep it consistent. That way you can get a feel of your results, and your results will be consistent also. And you can pin down areas you may need to improve, whether it's watching for chop, paying attention to resistance points or something like that. And then if you wanted to experiment with which strategy would work better for you, you may want to use one, say for a week or two, widening to the DPI. And then for the next section of time, switch to trailing at the higher low of the previous bar, but just do it consistently. So that way you can compare and see which one may work better for you, as they are both optional. And again, I don't know in the long run if it makes a huge difference. It obviously is going to make some difference, but and ultimately it's just one of those things that's up to each individual trader and their trading style risk tolerance and all that. So I like widening to the DPI, even though this situation happens once in a while, just because I feel it's overall easier to manage the trade, less stressful, um, and I'm not worried about constantly getting wicked out, and maybe if the next momentum I hop in uh, may be the one that happens before the turn bar. Then we do have a bit of a price reversal. No qualified setups here. There was this qualified momentum that does get stopped out by this tail here. It does dip down about 16 ticks. And this triggers another momentum entry, but this one is too close to the high of the day. This entry, we did have enough space. We had 8 ticks, so for a momentum trade we only need 7 ticks of space. This one, we have considerably less space running into the high of the day. And our direction histogram isn't outside of its neutral zone. So I wouldn't really be eager to enter into this one. In fact, I wouldn't enter into it at all because of that fact that the high of the day could just be too strong a resistance point, and my indicators aren't telling me that I should go for it. And in this case, it would have hit profit target, and that's going to happen sometimes. But don't want to get in the habit of playing these mental games with ourselves of, or the saying I hear a lot, leaving money on the table. It's going to happen sometimes. I mean, it could have just as easily went against us and got dinged twice in a row. So if your indicators give you a clear signal that you should not enter the trade, it is best to not enter the trade. And again, we have a possible breakout. I don't think the direction barely gets there, but in this case, it seems a bit risky to me, mainly because this high of the day. I did just get stopped out here. And again, we have our turn bar. So if we would have entered this breakout, it would have been stopped out. And the only reason I am concerned about this at this point is because after this initial rush, the market slowed down considerably, and we did see quite a bit of indecision. So maybe during a normal trading day, I wouldn't be so concerned about that. But because the market was moving so slowly this morning, it was just a little sign to me to perk up my ears and be a little more cautious. And that's okay to do sometimes. And we do have a qualified single T here. But again, we are too close to the high of the day. And we've seen that this high of the day has been somewhat of a resistance point. We did move it up a couple ticks, but that's not enough for me to signal that we're ready to push through there yet. And in addition to that, my direction histogram is not outside of the neutral zone. So I've got 2 signs that tell me not to enter into this trade. And it does end up succeeding. So I may have made the wrong call, being a little too cautious, where I actually had enough room. So I should have double-checked that. Let me see, because my high was 61. So I did have just enough space. I had 9 ticks. I thought I only had 8. But, you know, that's going to happen sometimes. But again, we get in this situation where I have a possible breakout. Same as before, my direction histogram just gets out, but I'm not convinced because of this right here. Specifically this area. This little bit we moved from the last established high. And sometimes the markets will do that. You'll just notice a strong resistance point, as we saw in the TF, that it's just not going to break out. And so we see our entry price would have been 5061.25. So the profit target, if we had entered that breakout, would have been 5063.25. And it looks like it may have just hit that price, but not traded through. So it's possible that that would not have get filled. But again, we can see how these patterns can clue us in when something may be a little more risky than normal. And then we just have a short price reversal. No setup, as our 10 and 20 are right on top of each other. And at this point, our blue line isn't on the correct side of the histogram. So we wouldn't want to enter into this, which would be a single T if it weren't for this blue line. And then again, we just have a short little move up, and then we get our turn bar. So we can kind of see that this is a similar pattern to the TF where we get locked, but the channel just kind of keeps moving up a bit. But similar kind of story. So something for you guys to be aware of. Joe mentions breakout in YM. Let's check it out. Yep, we do have a possible breakout in the YM. Let's see here. The entry would be 19,781, which it looks like it already, nope, hasn't touched that price yet. Am I right? Current low? No, 19,785. I'm sorry, because that would be one tick below the low of the day. If we look at our rules for a breakout trade, we're looking for the price to run into the higher low of the day, in this case the low, and we do want to see our direction histogram outside of the neutral zone, which it already is. It's at minus 74, pretty far outside of its neutral zone. Our entry price is going to be one tick below the low of the day, and the trade can be taken up to a maximum of 10 bars from the most recent turn bar. So this will be the fourth bar that's going to be the breakthrough bar. So we can definitely take that. It is a fully qualified trade. It's possible we'll hit the profit target on this one. We did break through here for a couple bars, so it looks like the YM's trying to go short. So we do have some clear signs of a short trend, but is a qualified breakout. And we can see how quick that was to qualify. And the bar's not done painting yet, so we can still make our decision. And once you spend some time with the rules and get screen time, trade sim for a while if you're starting out and want to practice until you get a good handle on the rules. But you can see once you get the hang of it, how quick it actually is to qualify these trades. I mean, of course, it does come with experience, and the only thing that provides that is just watching the charts, seeing a lot of trade setups, studying the rules. So to make it easier for starting out, I did mention yesterday, you want to focus on the single T and continuation trades. Maybe throw the momentum in there. That's also easy to qualify. But the single T and continuation are very foundational and will provide you with a good framework of the rules. And then once you have those down, they're both pretty similar, a few subtle differences. But once you get those down, the other rules kind of fall into place, the other trades, because we recognize that, oh, I'm looking for my EMAs to be in the correct order for a lot of these trades. I'm looking for my blue line to be on the correct side of the histogram. I'm looking for my super trend to be outside of its neutral zone. So a lot of these rules kind of cross over through several of the trades. And then once you get familiar with a few of the trade setups, the other ones just kind of you just start to see them. So, but of course, with anything, practice makes perfect. Um, we are down to the last 15 minutes of the class, so I'd like to cover a bit of the some psychological aspect of trading and some pitfalls that I've seen some newer traders with the system kind of falling into, that just being aware of them can help us avoid those situations. All right, it looks like that one did move, and looks like it would have hit profit target. So 785, not quite yet. Looks like it's almost there. So we need 786 to hit the profit target, but looks like it's going to get down there. Anyhow, so some of the things, first thing I'd like to mention is confirmation bias. That's very important. One of the most common things I hear from people who are just starting with the system is about the green or red dots. They love these dots for some reason. And they'll ask if that just means, is that a signal to buy by itself? No, none of the indicators are a signal by themselves. The divergence reversal actually has more rules than any of the other trades we have, but they'll notice this time where they'll say, anytime I see a dot and the blue line cross from one side to the other on that turn bar, that's a winning trade. Just flat out. That's a trade. And first of all, it's not. If it were that easy, that would be the rules. As there was quite a bit of testing done, and all the rules were added to help eliminate losing trades, so that we only pick the most qualified, high probability trades. And the second thing that happens is once they start to notice that, then that's the only thing they notice. They'll only look at those trades that confirm what they already think is true. And it may not be. They may be only watching one market and not considering all the other times that that same setup they see happens and doesn't succeed. So your brain kind of puts some blinders on you, and it's easy to convince yourself a trade's a winning trade if you want to. So something to be aware of. Also, we did cover late entries. I would like to talk about late entries, flattening a trade early or lifting a trade, especially a runner. I've heard a few people ask. It's kind of rare, but I just want to throw that out there so everyone's clear. The trouble with flattening a trade early is, we could get into a trade. We do have our 22 tick stop. And maybe in that particular trade, we're not feeling comfortable with the risk, but we're already in there. But we know there's risk involved in trading, so we had to be okay with that risk before we enter the trade. After we're in there, I think it's a little too late to make that decision, because what can happen is we see it going, we see the price going towards our stop, and we start to get nervous. Maybe we weren't feeling 100% confident about the setup in the first place, whatever the case may be. And it goes up to 12 ticks or something, let's say. And you say, that's it, I've hit my limit, flattening, getting out, taking my 12 tick loss on my 3 contracts. And then what happens? It may even go up a few more ticks toward our stop, and then it goes back down, hits our profit target, and we would have been in a winning trade. But we got out of it because we were worried we were going to get stopped out. Well, first of all, we stopped ourselves out ahead of time. Second, we have our stops in place for a reason, because that's the amount of risk we're willing to take. The 22 tick stop is there because that's the optimal place for the stop we found, where we have enough wiggle room for the trade, and it still makes sense over the long run uh, with our win-loss ratio, and our money management strategy helps us uh, well make up for any stops we do incur. So we put our stops where they're supposed to be and let them sit there. You don't want to get in this game where you're moving it up 3, moving it down 2, and that kind of thing. We have a very clear order of execution as far as the stops go. And if you alter that, you're going to get inconsistent results because you're not following a set of rules consistently. And as far as lifting a trade ahead of time, I've heard this one a couple times, and I really don't understand it, especially if you're in a trade where you've already hit profit target and you have a runner with a trailing stop. Why would you ever lift that trade? Just continue trailing it until you get stopped out. There's no sense to lift a trade early. We're either trailing at the low of the previous bar or we widen it to the DPI. We've already made profit on the trade from our initial contracts, and this runner, now that we're trailing the stop, has secured some profit. Why not see how far it can go rather than being satisfied with a certain amount of profit, lifting it early, and then it could go 10 or 15 more bars. And then, all this psychological anguish sets in, and it just throws off the whole game. So it's very important to stick to the rules. They're there for a reason. And the only way you're going to see consistent results is if you follow a set of rules consistently. And that's one of the major differences I've seen between people who are very successful with the system is they're very disciplined about following the rules and the money management strategy. So just wanted to cover that. Very important, as I think the psychological aspect of trading is probably the most difficult, because we can get into all these mental games when there's money involved, of course. But we do have to realize as traders that there is risk involved, and if we weren't comfortable with that, we wouldn't be trading. So, all right, guys, we have about 7 minutes left. So if there are any other last-minute questions. Oh, Joe D mentions the fix for the turn bar alert. Yep, that is being worked on. I'm not sure when it'll be updated on the website, but should be pretty soon. So I would imagine within the next week, 2 weeks, but don't have a solid release date. So don't quote me on that. But it will be very soon. All right, thank you, Cliff. So is there anything else you guys would like to see covered very quick before we head out for the day? Joe, we'll likely send out an email. Matthew F. asking NFL predictions. I actually don't keep up with sports, so I wouldn't even know. I maybe catch a bit of a game here and there in passing, but not my forte. So you might as well roll a die. That'll be about as good as my prediction. So, all right. So looks like there's no more questions. If you guys do have anything that pops up later in the day you want answered, feel free to send an email to support@academydaytrading.com. We'll get to you as soon as possible. If you have a question about a specific trade, it helps to include a screenshot if you can. If you can't, just list the market and time in Eastern Time. That way it's easiest for us to reference, check that quickly, and answer that question for you. Oh, Bob mentions my chart background colors are different than yours. That is possible. Sometimes there can be some uh, slight data feed differences. Sometimes the data feed doesn't update immediately uh, for the colored background to register when it should. Usually it does, so a quick refresh will straighten that out. As we can see here, I see what you're talking about. Um, and that's a good point also. While it is um, easy to tell with the colored background, I do still like to confirm and just visually check the order of the EMAs and my blue line. And that might be just because I'm used to doing that way. I do use the colored background as like a confirmation, but I do like to just, and I usually keep a running tally of what rules have qualified as the market moves on. I find that helps so that we don't have to qualify all of the rules when a possible trade setup occurs. So we can already know ahead of time, hey, I already know my EMAs are in the correct order. I already know my blue line's on the correct side. So if I get a turn bar in the direction I'm looking for, all I need to check is for my super trend, or if it touched the 50, so I can disregard the super trend. So that way, half of my rules are qualified ahead of time. And you really want to have as many rules pre-qualified as possible so we can put in our order as far ahead of time as possible. All right, everyone, we're about down to the end of it. I'm going to cut it about 2 minutes early. Thank you all for joining me. I hope you guys learned something, leave knowing a little more than you did when you signed in. I hope everyone has a great weekend. Enjoy your 3-day weekend if you get one. Markets will be closed Monday. Hope the rest of your trading day goes well, presents you a few opportunities. And until next time, happy trading.